Okay, folks, welcome to the member stock pick request video. This is where we review the symbols that members would like for me to review. So before I get to those symbols, let's take a look at the S&P 500 daily chart. Big breakout day. They try to take it down after a gap higher, filled the gap. Bullish key reversal, close above the 50-day moving average. We should see higher highs. Volume well above average. Oscillators looking strong. Now, what's the proximate cause of this rally? It's because the ECB decided to monetize another trillion gazillion dollars worth of debt. And for whatever reason, that makes U.S. stocks cheap. I don't get that. I understand why European shares would rally, but I don't understand why there is a flood of money into the U.S. markets. Could be temporary. I can't see how more European quantitative easing is going to be great for the U.S. markets. I just don't get it, because all you need to do is look at the U.S. dollar and look at the reports out of J&J and American Express saying just how much the rallying U.S. dollar has impacted their earnings, and not in a good way. So here you have the U.S. dollar, a huge, huge move higher today. And this could quite very well be the rally that we were looking for, that push to above 80. In fact, we're at 80.01 now. That will set us up for a real aggressive approach to buying commodities, oil. And that may be a problem due to the fact that you had King Abdullah of Saudi Arabia. He passed away this evening. So that's probably going to send oil higher due to fears of the unknown in Saudi Arabia and what policies his heir will assume. I doubt it's going to last very long, especially with the U.S. dollar in just now a real parabolic move higher. And this is not going to end pretty. The Russell 2000, a breakout today out of this triangle formation, a very bullish key reversal. We should hit this upper band of resistance. Volume was not good. It wasn't bad, but it wasn't fantastic like it was on the S&P 500. So yes, our TZA trade took a hit today. However, it was more than offset by our FXCM trade. So thank goodness for that position. And we'll look and see whether or not we get a breakout above this key resistance level, because as I always like to say, the test is always at the top. All right, first chart up is BAS, Basic Energy Services. We have a W formation setting up here. A higher low, prior low 5.01, new low 5.26. Draw your trend line down. We have broken out on a daily chart. So while, yes, you can get long of this position, you got to use a stop loss just below 5.26. A little bit of a bottoming tail today. That's a sign of support. Higher lows and ultimate oscillator, and we broke out today above this pivot point. So the chart of BAS looks good. Next chart up is EGO, Eldorado Gold. I think I went over this last week. Very bearish day. No shock. We're probably going to go considerably lower on this position due to the fact that the U.S. dollar is just going to go parabolic. It's just going to head higher from here, and we can only sit by and watch the ride higher and look for our opportunities to get long of oil, commodities, etc. But EGO, I wouldn't short it. You could, but you have to use a stop loss just above the day's highs. I wouldn't short it personally, but it's certainly not a buy. I would avoid it. Okay, Cypress Semiconductor, CY the symbol, a very bullish chart. We had a bullish key reversal today. They tried to take it down below support. They failed. It put in a higher low. I think we're going to take out 1542. This is a stock that wants to head higher. Great volume. Volume has been rising sequentially to the upside, bullish, double bottom setup on the slow Stokes. You just might get a rollover here, but if you do, you have to buy on this double bottom setup if we get a rollover on the slow Stokes. I'm quite bullish on the chart. I would be a buyer, and I may just be a buyer of Cypress. Flextronics International, inverted head and shoulders setup. Head, left shoulder, right shoulder. And here is your neckline right at 1139. So you could buy this stock down at these levels. You need to put a stop loss just below 10.35. I would not buy a full position. I would scratch the itch, buy a few shares, get it out of your system, see if it works. Wait for that breakout and the close above 11.39. Remember the 3-day rule. 3 consecutive days of trading above 11.39. Watch for a continuation move higher. Then I would add to that position. Okay, SWKS, Skyworks Solutions. This is a daily chart, a very, very bullish key reversal today. I think that we can head higher and substantially higher. We have rising up volume bars. Oscillators are looking quite strong. The key with trading the stock, though, is that you need to be experienced. And an experienced trader would use a trailing stop loss, say between 3 to 5%, and let the market take him out of this position or her out of this position. Because there's going to be a rocky road ahead. Just when you think it can't go higher, it's going to shoot higher. So we are nearing the doorstep of 70, where Technical Analysis for Dummies says you should short the stock. I say you buy the stock. It's probably going to head considerably higher, especially when you take a look at the weekly chart. You had great bottoming action here, a nice breakout this week. We're moving higher. RSI is where? 78.35. We're going higher. I really like the chart. Neighbors Industries. You may see a pop tomorrow on NBR. I'm not sure whether or not it's ripe to break out yet. Again, strong U.S. dollar should be bearish for oil. So what does that mean for Neighbors, which is in the oil services sector? It probably means that it's going to come back down and retest the support level. Now, granted, optimism. We have a double bottom setup. If we break out and close above this declining downtrend line, 3-day rule, we trade above it for 3 consecutive days, then you can buy the stock. If you're going to buy down here, you need to use a stop loss order just below 9.96. Volume has been pretty good. Double bottom setup, higher lows on the ultimate oscillator, very strong. I just don't like the U.S. dollar and how it's rallying. So we'll see how Neighbors holds up. It held up well today in the face of a strong U.S. dollar. So maybe it's going to withstand this move higher on the U.S. dollar. I would watch and wait personally. But if you're going to get into the stock, use that stop loss just on a close below 9.96. Bank of America rallied today into the 200-day moving average. Why? It's because yields rallied. And rising yields are good for the banks. So we may be looking to get into Bank of America. I'd like to see a pullback and hopefully a higher low. And we'll get back involved. Remember, we sold up here before the big correction. Good volume today. I don't think there's a huge rush to get back involved with Bank of America. Let it slide back down. Put in a higher low. We'll look to get back long again. Apple broke out today out of a declining downtrend line. We closed above the 50-day moving average, quite bullish. Higher lows on RSI, we broke out. Volume above average. Higher lows in Ultimate Oscillator. What can I say? The stock is looking good. Higher lows on the slow stochastics. It's a buy. TCEHY. 10-cent holdings. Come on, you guys. 10-cent holding. I love this name. Sounds like a rap star. I don't know what they do. It's an OTC stock. Just be forewarned. The stock is definitely getting squeezed. And I can tell it's getting squeezed by the way it's trading. It's just getting gapped higher each passing day. I don't know when you get involved with the stock, because when it corrects, it corrects. And the trend being any guide, tomorrow morning we should open up right and into resistance. I don't see the play here. It just seems to be getting toyed with. So I would avoid the name, even though the chart looks good. It's under accumulation. I don't like this. We're not seeing follow through an ultimate oscillator. I'm going to show you what I mean here. I'm going to do an overlay. All right, so here you have the ultimate oscillator overlaid. Here was our peak, recent peak, right here on, let's call it the 8th of January. We pulled back. The price is broken out. Where's the ultimate oscillator? Way down here. That's not a good sign. It's a divergence. I would avoid it. Too much risk. SanDisk, SNDK, bad earnings. This is a weekly chart. We broke down below the lower band of the rising uptrend channel. It's a broken stock. You're going to need to watch for some consolidation. Now, we rallied off the lows of the week. That could be your dead cat bounce. Let's check out a daily chart. Big reversal day today. I don't know. I think the trade was getting involved down here at prior pivot points. I don't see the safe trade from this point. Maybe a pullback and a retest of the support level. We'll see if it holds. But you have the 50-day moving average, which is declining, and it's going to take out the 200-day moving average. I don't see the trade to the long side. I don't see the trade to the short side. I would avoid it, at least for right now. IDRA, Indira Pharmaceuticals, flag formation, bottoming tails. I think we break out. I like the chart. I think it goes higher. Higher highs on ultimate oscillator. I don't like the fact that you have both Stochs lines trading below 50. That's a concern, but you know what? The S&P 500 and the Russell 2000 both had Stochs that were trading below the 50 level this morning, and that didn't help matters any for shorts, me being one of them. So, well, for that matter, IWM still has Stochs that are below 50. So we may not be out of the woods quite yet on IWM. For longs, anyway. Warren Resources, I would avoid. I could just tell already by the slow Stochs, a lower high or a rollover below 20 is always bearish. We're going lower. So I would avoid this trade right now, especially with the dollar in rally mode. ADX, double bottom set up in red. Looks like it wants to move higher. I would avoid. I wouldn't touch it. FXCM, we're probably going to book profits tomorrow. Hopefully we get another move higher, and we'll sell into that strength. Good volume today. All right, so that's the game plan with FXCM, and then we'll look for other opportunities. And that's it, folks. Remember that Friday is short covering Friday. Watch the volume tomorrow. The volume is going to be the tell. Will we see a continuation move higher on the S&P 500, and will it be accompanied by rising up volume? Or will we see a resumption of the decline in up volume? Same thing goes for the Russell 2000. Will we see a continuation move higher and a close above resistance? Will we see a move higher on volume? That is a sign that institutions are buying the market. That was not the case for the small caps today. Perhaps tomorrow, but it really wasn't today. Maybe some, but not big institutional players to send this index higher. It could be tomorrow, but we'll watch, we'll wait. We don't want to react to this knee-jerk reaction out of the European Union. I mean, really, what does it mean to us? All it means is a stronger U.S. dollar. What does that mean for sales overseas? They get adversely impacted because our goods become more expensive. So It's not really the best of things to happen that the U.S. dollar is adversely impacting our multinationals. It's going to be great if you want to take a trip to Europe soon, no doubt about it. Book those reservations. And that's it. I'll talk to you tomorrow.